CHARGEPOINT are one of the world's biggest providers of electric vehicle charging infrastructure and solutions. And at the moment, with the infrastructure bill hitting the US, it could be a good opportunity for them to establish themselves further, especially in the States. In today's chart of the day, I'm going to take a look at where the price of CHARGEPOINT may be heading next. Hello, I'm Stephen Ho, trader and founder of TheStopHunter. So before we can carry on, a risk warning for you to pay close attention to. The content in this video is not investment advice, so please seek the advice, help of financial professionals or financial advisors before investing and trading. And trading and investing involves a high degree of risk and your money is at risk, so be very careful. So with that out the way, let's get on with the analysis. 2021 hasn't been a great year really for CHARGEPOINT. On the weekly line chart here we can see really it wasn't bad. 2020, very aggressive rise in price up to 46 and a bit dollars, and then this year a sharp decline into Easter and then really going nowhere to slightly bearish for the rest of the year so far. A little bit of a recovery from October time, up to nearly $28 at 50% Fibonacci line. Next stop is where we last saw the highs, around about $32 in early summer. That 61.8% Fibonacci line can break up from there, then it's got to look forwards to hitting those previous all-time highs around $46. If it reverses from its current situation, uses this 50% line as a zone of no further go, then downsize $23 at that 38.2% line, then about $18 at the recent lows at the beginning of October, and then it's down into the real noise where it first came from. At the moment though, it's sort of a mixed chart, a longer term bearish view with a shorter term bullish recovery. On the 4-line break chart we can more clearly see the recent recovery in the price from early October. Now reversal points to go back in line with that longer term downtrend. Well, we've got two. We've got the aggressive one, which is that pink line you see first up, which is around about $25.5 to $26, and more conservative reversal entry around about $24, the early $24 mark. So something there for the swing traders or the reversing back to the trend type strategies that you might just have using the 4-line break chart. So our signals mixed at the bottom of the daily Heikin-Ashi chart. We've got the RSI just turning bearish, and the regression line, which is green at the moment, is heading that way as well. We've got a pick up in the volatility above that to about 86% annual, and volume not really that much changed at the moment, still round about its moving average or just under. Now in terms of price, you can see the 2 standard deviation regression band, the light blue and the salmon pink lines there, and it has been trading within that for most of the year, and when it gets to those highs and lows it does seem to reverse, and we are looking like we are approaching that zone now. So an interesting price point could see a reversal here, and that's when that 4-line break chart that we just covered off comes into play. So at the moment it's looking, although despite the recent recovery, starting to feel a bit more bearish again. I've used a 60 cents block size for the Renko chart. Our signals, the bottom two bearish, the regression's still bullish but heading towards more bearishness, similar to the Heikin-Ashi chart. On terms of price action, trading within the 2 pink line box breakout system, so neutral there, on or thereabouts its longer term moving average. Trend has been downish since the summer, and in terms of price numbers using the Fibonacci, then we've got a lot of support, probably around about $25 in the shorter term. Then below that, $22, $18, the more recent lows in October time, and then down to $13 after that. To the upside, if we can break above those 2 standard deviation regression bands that we just seen, then we're looking at 29, and then possibly the highs around 36, and if it can improve from there, $41 to $43 is not out of the question. But this has got a feel of weak bearish neutral. So the outlook for ChargePoint on the technicals, I've given it a score of weak bearish at the moment. The Renko chart looking a bit more bearish to me than the Heikin Ashi, where there's a bit more neutrality in there, although we have got the stronger downtrend. And in the top right corner there, 2 entry points if the price does reverse in the way of that longer term downtrend. And if we took a quick look at the targets, then upsides 1.33 and 2.67 to 1, more attractive to the downside 2.33 and 4 to 1. So ChargePoint weak bearish at the moment. Now ChargePoint has a lot of potential, but it's also facing an increased amount of competition in the EV sector. The infrastructure bill in the US might hand it an extra boost, but time will tell. Let me know in those comments below what you think of ChargePoint, where it might be heading next. Do you agree, disagree with the analysis? Like to hear from you. Now, if you like the analysis I've used in today's video, want to learn more, I'll put a link in the description below for you to follow. If you've liked the video, please give us the thumbs up. Don't forget to hit the subscribe and bell buttons to receive future notification of content I'll be producing just like this. Now, all that's left for me to say is thanks for watching. Good luck with the trading, and I'll see you in the next video.